Steinhoff International Holdings reported diluted headline earnings per ordinary share of 226.7 cents for the year ended June, up 1% from 225.5 cents. Revenue increased 21% to 43.04 billion rand. Most of the group's revenues came from its European household goods businesses, which accounted for 47% of total revenues, and from manufacturing and sources. 21% of its revenue was generated by its South African operations. A distribution of 65 cents per share was declared from 63 cents in 2010.
Steinhoff got a market cap of 36 billion, price earnings 8.9, dividend yield 3.0%, bang on 3%. Paul, let's come to you first. Not a bad set of numbers. I mean, you know, when you look at it, revenue up 21%, headline earnings, or diluted headline earnings per share flat. I suppose that's a bit of the conforma transaction. We can delve into that. Not bad set of numbers from them.
I think actually a very good set of numbers, and obviously with what we've discussed early on off air, I think the numbers have been really good, and I think at the same time we should see numbers improving into the next half of the year, especially after these deals have been concluded.
The concern is that the geographic diversification of the company is really causing concerns, especially around the fact that 60% of their revenue is driven by continental Europe. Rand strength also a bit of a risk factor there. How are we going to manage that going forward?
Well, if you're negative on the rand, I think this is a positive for the stock, and I think in the short term, I think this is going to definitely pay well for Steinhoff. If the rand continues to weaken, I think anyone holding Steinhoff shares will be laughing all the way to the bank. So I think positive for the stock. Let's
go to Colin the Wall. Colin, we're looking at the chart here. Certainly what we're seeing is a stock that's been trending down since about late Q1 of earlier this year. What are you seeing on the chart there?
Correct. It's formed a large rounding top pattern, which has pointed to this downturn that we've had over the last few months. Support is at line 1 that I've drawn here at the 20 Rand 60 level. If that level doesn't hold, then I would expect it to drop to 19 Rand. Right now, as we speak, it is still quite overbought. If you look at the stochastic oscillator on top over here, which would point to a bit more downside in the short term, and there's a good chance that this line 1 at 2060 does break. To the upside, it really needs to get above 23 Rand 20, which is this line number 2 over here. If that happens, then expect it to go to new all-time highs, but right now it's still looking vulnerable.
Your positive divergence on the stochastic there, you're not taking a lot in store from that?
This is something definitely to keep in mind. A positive divergence is an early warning of a rally to come, but it's quite a large divergence, so I would see it as more medium-term warning, a positive for the medium-term alert of a rally to come. But in the very short term, we could well see some more downside, but that will set up a good rally probably into 2012.
Paul, let's bring it back to you on the desk. What are we looking at here in terms of the balance sheet? 6.3 billion cash on hand, up in at 1.2 billion. It's a lot of cash in 6 months. Net gearing, debt at 46 versus 34. Now, that's a Conforama deal. Yeah. Can we say that I look at 46% and my gut says that's a lot of debt, but they've got a fairly strong balance sheet, and man, they print money.
Yeah, they do, and I think over the years we've seen that they continue to print money, and over the years they've reassured the market that they have near to cash assets, and at times it's been reflected in their bank balance. So at times I think this is a company that can quickly get out of some of the debt that it's holding, and from the numbers we've seen that they have the capacity to not only pay the interest but also to restructure some of their debt. We've seen them do that in the last month, and when they restructured some of their debt another 2 years out, and I think this is a very good strategy on their part.
Staying with you, Paul. Analysts and the market generally very satisfied with the fact that they disposed of their divisions to JD Group. what about a division like Bison Group, PG Bison? Do you think that there will be a chance that they will be getting rid of that?
I think there's been talk about it in the market for I'll say the last 18 months odd, and I think they are a very astute bunch of gentlemen, and I think they're definitely looking at unwinding some of those positions, and hence giving themselves some leeway or some leeway to put the money elsewhere.
Paul, one of their key thing is vertical integrated. They manufacture in Eastern Europe, they sell in Western Europe, so they make where it's cheap and they sell where they can get a good price for it. It's worked brilliantly, don't knock it whatsoever. But I see down the line, we're seeing pressures in Western Europe in terms of growth, maybe 1 or 1.5%, and Eastern Europe kind of picking up in terms of living standards, therefore people wanting higher salaries, big flat screen TVs, etc. Yeah. Is that going to put pressure in their model, or do they just say, well, if not Eastern Europe, Russia or Iceland or wherever?
I think with Steinhoff, they've clearly said that they're going to go to any emerging market where the cost structure is in their favour, and this is what they've done over the years. And I think you're very right in saying that obviously Eastern Europe is catching up quickly with the West, but this is a textbook case in my opinion, and I believe that Steinhoff will continue to outthink the market and continue to be ahead of the curve.
A little bit disappointing, though, in terms of its dividend, only 2% up, sitting at 65 cents. What do you make of that? Well,
they're not heavy dividend payers, and they haven't been over the years. And I think the market has always known that. And for us, we haven't been looking for a strong divvy in Steinhoff, but we're looking for the potential growth prospects. And they've continued to show it in their acquisitions and obviously in some of the disposals they've made in recent times.
Colin, I want to come back to you on the wall there. You talked about your two different levels, just below 23 on the upside and on the downside around 2060 there's about. At the moment, is it almost in a sense that it's almost a no man's land and you wait for, assuming you're not in already, you wait for one or the other to give?
Yes, it's been going sideways over the last month. And that's exactly what I would do, because it is still vulnerable to downside. So if it does break down, you don't want to go in and buy it right now. So rather wait to see if line 1 holds. If it does hold and it breaks out above 23.20 and closes above there, there would be a confirmed buy signal and a very bullish setup on the chart.
Paul, coming back to you in the desk, 2 points that you made. One where you said it to outthink the market. The other, my sense from what we're talking, is a deal maker. Yeah. I don't want to say it's a personality, but what we're buying here is a management team who are a step ahead of everyone, massively smart, and I suppose as long as they're there, you're in business. But it really is the brains of the operation that has made Steinhoff the business.
Yeah, they have. And I think, like you've rightly said, they've continued to I don't want to say outwit the market, but yeah, they've definitely been ahead of the curve, and I think they've put in place a lot of plans to be ahead of the curve. And I wouldn't be surprised if they are eyeing other opportunities in Europe and potentially in Asia. And I think we could hear some news of that very soon.
Paul, it sounds like you're quite impressed with Steinhoff.
It's a stock I'll buy for my nephew and niece for Christmas. That's definitely.
So it's hot for you?
Definitely hot.
Colin, how do you feel about Steinhoff? Hot or not?
Right now I'm neutral on it until it can break out above line 2, 23.20. I'm neutral to cold. If it breaks down below 20.60 and keeps falling down to 19 Rand, then I'll become hot on it.
So it just depends on those support and resistance levels. How about you, Simon? Hot or not?
You know, Steinhoff is one of those companies I've always thought to myself, I like it, I don't quite understand it, I don't want to buy it, and every time I look, it's gone up more. You know what I might use is some weakness that 19 Rand would then make it perhaps massively. To push the dividend yield up to around 4 and change would pull the price earnings around to 8. I would say you're buying a management team, you're buying a great company. I would like a little bit cheaper, but I think I'm being greedy.
Right, well. There we have it. One hot, indecisive there, and a lot of indecision there coming from your side too, Simon, depending on that 1%.
I've never worked out Steinhoff.
Ah, okay. Moving on to Hyprop now. The Property Investments Group's first half revenue rose almost 7% to 563 million Rand. For the 6 months to end June, Hyprop's net income growth from shopping centres grew 9.7%. The group's net asset value, excluding deferred taxation, rose almost 3% to 56 Rand per combined unit. Looking ahead, Hyprop said that attention will be given to disposing of its non-core assets and extracting value from its acquisition of At-Fund Retail.
Hyprop market cap 9.3 billion. That's going to change markedly when the At-Fund kicks in. Price earnings 15.6. Distribution, because remember, property stocks pay interest of 6.5%. Paul, the distinction here with Hyprop against the other property stocks, you've got offices, which we're seeing occupancies is, we're down in the 80%. Industrials, they really got sort of middle to high LSM shopping centres. They sweat their assets and they're sitting at occupancies of 97%. 90%. If you strip out Stonebridge, almost 98%.
Correct. I think Stonebridge obviously pulled them down quite a lot. I think occupancy levels in Stonebridge are around 46 or just over 40%.
Vacant almost.
Pretty much. And I think apart from Stonebridge, the majority of the other properties in their portfolio are astounding. If you look at Rosebank just around the corner, it's I think where everybody wants to be in Johannesburg. Look at Canal Walker down in the Western Cape. They are, I think, a great place to have business. And on top of that, in all these areas, you get a lot of traffic coming through. And I believe they've got the ideal properties in the portfolio.
Well, great locations, but what about the quality of their tenants, though, Paul? They've had to increase their provision for doubtful debts from 15.7 million rand up to 18.5 million rand.
Yeah, I think you've got a valid point there, but I think a lot of the tenants at the moment are still very good tenants, and in most of the complexes I've referred to, they've got some very strong anchor tenants who have over the years attracted other like-minded tenants to those shopping centres. So if you take Rosebank, for example, it's, I think, the ideal shopping mall that you're looking for in Johannesburg, and it's now being complemented by the Gautrain coming through, and I think that's going to totally revolutionise shopping in this part of town. And
a giant Standard Bank office, which is going to bring tens of thousands of people. Colin, let's go to you on the wall, Hyprop chart. This is almost an easy one, but I don't want to knock it. I mean, it's going up. Do we have more momentum behind it? Do we have more potential upside here?
Yes, it's pointing to an upside target of 64.50 rand, which is based on a large triangle here formed during 2008-2009. In fact, it broke out at 40 rand, which would have been the confirmed buy signal. It's now trading around 55 rand. And there's a minimum target, as I said, of 64.50. So there's still some good upside to come here. This year, it's been moving sideways, though, with an important support level at line 1, which is 51.50. Even if it breaks below that level, I think that'll just delay the upside process, but there is a higher target, and I would expect it to get there.
So you say a break of that 51.50 wouldn't overly concern you, that upward trend is remaining intact?
Not really. It'll probably fall if it did break 51.50 and close below it. This is a weekly chart, so you have to close below it on a weekly basis. It might fall 4 or 5 rand, and that would probably make it an even better buying opportunity. This is definitely a share I would still be buying on pullbacks. It's also in a very good sector, and it still looks positive to me. That
oscillator is not looking positive or negative. What exactly is it telling us?
Well, it's not really telling me too much at the moment, just that there's a bit more upside that it can go in the short term here. It's not overbought yet. So we might see it continuing sideways a bit longer and then might come down a bit. But either way, this is a share I would be looking to buy on a correction.
Do you think that bullish trend will be maintained, though?
Certainly until it gets to the target, yes. 64.50, that's a minimum target, and it may well go past that.
Paul, bringing it back to you on the desk. Consumer story here really with the shopping centres, as you said, quality shopping centres around the country. The ad fund brought a lot more to it. Canal Walk used to be 50%, it's now down to 20%, so it reduces concentration risk. I suppose so it's a case of look at Woolies, look at ShopRite, look at what their tenants are doing. We've seen great numbers out of most of them. That then tells us what's going to be happening at a stock like Hyprop.
No, I agree totally, and I think what they've also tried to do in recent times is to identify more attractive spots in town, locations, and I think for now, like you rightly said, they've got a lot of concentration in the north of Johannesburg, and they're looking to diversify some of that risk. But I believe a lot of the retailers are bringing or attracting the numbers, and hence I think they will still have very good tenants for their stores.
Just looking at some of the office portfolio and some of the tenants there, the income from the Hyprop Investment Fund was down 5%. So surely they should be focusing. I know, Simon, you're a little bit cautious of this over, concentration and emphasis on the retail space, but surely the office space isn't doing too well either. If the SICOM property fund is down 5%, that may really knock down the income.
Yeah, I think the focus hasn't been on the office space. I think the focus has been primarily on the retail space, especially in the shopping centres. And I think if anything, they might look to shed some of the properties in that area. And at the moment, if we look at other properties around town, there's a lot of vacancies, especially for office space, but not for retail space. And I think this trend could continue until we see an uptick in the economy.
Distribution 6.5, a little bit light for a property stock perhaps.
Yeah, I think a lot of property stocks are looking anything north of 9 and 10. I think hopefully within the next half or year we could see the numbers improving a bit.
So for you, Paul, Hyprop, would you say hot or not?
I'll definitely buy.
Colin, you on the wall there, Hyprop?
Yes, I like it. Definitely hot on the stock.
And for you, Simon, we've got two hots, so I'm guessing you're going to go with a hot too.
I do like it. I like the retail focus, and I first picked it up a couple of years ago, and I think there's still some legs in the retail. I think the consumers paring down their leverage and the like, incredibly well managed. I would like a higher distribution, but I suspect I'm not going to get one, so I'm going to make it quite simple. It's hot.
It's hot. 3 hots here in studio for Hyprop. It's unanimous.